Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. Gemma Mitchell, welcome to this episode of the Australian Finance Podcast. How you doing?
I'm doing really good. How are you?
Pretty good. Is it finance or is it finance or finance?
It's definitely not finance.
Okay. Right, I just wanted to make sure.
But I think you should keep saying it like that.
Okay. What have you been up to?
Big week.
Easter?
Easter, yeah.
Chocolate eggs.
I love an Easter egg. I've
What
been
kind?
banging on about it to anyone that will listen. I love Easter eggs.
Okay.
Any just
What would be your favourite one? Like, do you have a favourite one?
no.
So
I actually don't even mind like the cheap chocolate, you know, like the cheap
Yeah.
that you can just like taste the grains of sugar.
Yeah.
Yeah, I don't mind those either.
I like those little gold ones that have, they're like little mini Turkish delights, but they're not like Turkish delight on the inside. They're like, it's like reddy orange on the inside, and it's like a little one, a little egg, right? And it's like gooey. It's kind of like a caramello mixed with a
those are good.
Turkish delight. And I just remember them as a kid, and they're so good.
Yeah.
But you like hollow
I don't know.
chocolate.
I like hollow chocolate. I like really thin chocolate. So I think that's why I'm obsessed with Easter eggs. And like straight after Easter, they all go on sale at the supermarket. Actually, the kids saw all the Easter eggs the other day, like in Coles. They've been out for months. And they were like, why would they have them here? Like, doesn't everybody get them from the Easter Bunny? I'm like, like, some people the Easter Bunny doesn't come to, so they have to buy their own.
How old are the kids?
9 and 11.
Okay, so they're about to, do they know Santa?
They know both, but they just are playing. Yeah, they're playing along because my ex-husband has a rule that you have to believe to receive.
That's actually a good one. That's actually a good one.
Yeah.
I like that.
Got to believe to receive.
Yep, like it. Well, today we've got a bunch of questions. We've got everything from an international student and how you can maximize money. We've got things like the cost of women's things, I should say, and the differences between female and male spending. We've got a question about listed investment companies. For those of you that aren't familiar, a listed investment company, often abbreviated as a LIC, LIC, is one of those things that you can invest in that looks like an ETF, sounds like an ETF, but is not an ETF. So we'll cover that. And many of you will be familiar with it from the Barefoot Investor book, where he talks about things like AFIC and Argo, which are two examples of LICs. And the final question we'll be covering today is, what platform would you use for investing in micro-investing? So like using micro-investing for complete beginners. So we'll cover all of that. But just before we get to this, you can send in your question via the link in the podcast player. Or if you're on YouTube, just in the description field there, like there'll be a link that says ask a question, select that. And the Australian Finance Podcast when prompted. And Gemma and I will answer your questions. And we also get a host of other guests on the show who can answer specific questions, or if you want us to cover topics and those types of things, we can do that too. Just a quick note, we don't know your needs, goals, or objectives. So if we do answer your question, it's strictly general in nature. Be sure to read our financial services guide available on the website, which tells you what we can and can't say in podcasts and things like this. Don't act on the information until you've spoken to your financial advisor. The first question comes from Andy. Andy, there's quite a long question, so I will abbreviate. It says, "Hi Rask and team, I am Andy. You guys are doing awesome. Following since I arrived in Australia back in late 2023, you guys have covered so many questions, but I think nobody has asked about how an international student is going to invest." So it goes on to say that he's done pretty well, and from saving money while working and attending classes full-time, plans to live here for a few more years. And what would you recommend for all of us so that we can invest our money to have the maximum profit before we leave for our home country? Thank you. So this is a great question, because Australia, one of the biggest exports is actually people coming to study in Australia. We're here in Melbourne, but Sydney, Queensland, Perth, all around the country, our universities are really well established throughout the world. And so people come to our cities to study, they work while they're here, and then many instances they leave. Mm-hmm. And so they can leave with a little nest egg if they want earlier in life. So this is a really interesting question, I think.
Yes, I think it'd be very common, and it applies to lots of people because some people have a short time frame regardless if they're kind of leaving. So lots of the same principles, but here the time frame is so important. So when we hear the word invest, and then the time frame is always going to be the main consideration. Yeah. So this person's saying like 4 to 5 years. That's a tricky time frame because it's kind of like, I'm going, 5 years-ish. I personally would be pretty comfortable to be in some shares, but anything under that, I probably wouldn't. So it's like on that fine line. And, you know, we've had a really strong market. Yeah. It's kind of like, well, where are we sitting? Like, yeah, that time frame worries me. And then I'm kind of thinking also cash rates aren't terrible at the moment. Like you can get a decent like 5.5. And we usually say, you know, if your time frame doesn't suit investing in shares, it definitely doesn't property, you know, then you'd look at just holding it in cash, right?
Yeah.
And yeah, when cash rates were 2%, like that would be quite disheartening, but yeah, they're like 4, 5, 5.5.
Yeah, it's pretty good term deposits and stuff like that.
Yeah.
At the moment.
What are you thinking for a 4 to 5 year time frame when you hear the word invest?
Yeah, it's right on the edge, like you said, because if you do invest and you've got 4 years, then 1 year into that 4-year journey, you've got 3 years left. And then you're thinking, well, when do I pull this out kind of thing. One interesting point to note is that if you are not a citizen of Australia, you can still invest in some platforms. So for example, in our platform, Gem, as long as someone has an Australian bank account, they can invest with us because it means that they have passed the test to have an Australian bank account. So therefore the platform allows them to invest. But there are lots of tax consequences that could arise. And so obviously getting some advice maybe around things like, am I a tax resident and what tax rates would I pay? That might also determine what is ultimately invested in.
And I guess how long after you leave Australia that changes? Because if you invested but you have like 12 months of being like until it changes or something, you might go, oh, well then potentially my time frame's 6 years. I could push it out to if the share, like the portfolio wasn't doing great.
Another thing might be you might end up staying. Does that impact what you do with your money? Like you might have some shares that might need to be, maybe you want a home deposit or something like that if you end up staying. So there's a few things where you'd want flexibility in this situation, I think, just generally speaking, of course. I would probably say that, yeah, there's a lot of great like cash type things that you could buy. So term deposits, savings accounts. I'd probably go more term deposits given where we are with interest rates. And the other thing is the beauty of ETFs is ETFs don't necessarily mean shares. Like we have ETFs and I invest in ETFs that are not share ETFs. They're ETFs that invest in things that might be like shares, but they're not shares.
But totally different asset classes and things.
So, and then there are things like property, like ETFs or
funds,
REITs, real estate investment trusts. So there's LICs, which we'll talk about in a minute. And so there are things that may be able to be used and diversify or invest in something that's not necessarily shares, but have a slightly better return than cash. I would just say often erring on the side of caution is best.
Yeah, and it is tricky because if they did stay longer and then the time frame had worked out, they're kind of sitting on the sidelines. This might actually be like really similar to a Q&A we did recently about the ¿Por qué no los dos?
Oh, yes,
¿Por qué no
yes.
los dos?
Why not both?
Yeah, and maybe they do kind of hedge their bets and they go, well, I've got X amount surplus because they're saying they're, you know, making decent money. So maybe they go half-half and they go, yep, I'm willing to do this and I'm willing to put this in cash and that's my sleep at night test.
Absolutely. And then from there, I would be, like all good investing is looking at like diversified type things, so like ETFs and things that spread money around. Because being all growth may not necessarily be the thing that's right. We don't know. Honestly, like there's probably a good little bit of learning here around what would happen if I held my investments after I returned to my country.
Yeah.
What would be the tax consequence? Like, should I be selling before then or could I keep holding them? And what would be the tax consequence? Because there might be some sort of treaty or something like that between the countries which enable this person to keep holding.
Yeah.
the shares.
And it might not be long term that they hold them. It might just be till the market recovers if at that time when they're going back it wasn't a great time to sell. But knowing that can help you make an informed decision. So, yeah, I agree. That's what they should be researching before they dive into anything.
Because then they can maybe have more flexibility than they realise. Damn, it's expensive to be a woman.
It's a good name.
Says, listening to the budgeting podcast, I think that was one you did, Jem. Mm-hmm. I'd like to ask a follow-up question on discretionary money, specifically pink costs. The cost of being a woman. A haircut, hygiene products, bras, women's health, not even including beauty products. How do you balance that extra cost that a female has over a male? Is that discretionary? Does it go in an extra bucket? Now, you did ask around the office. I am the only male in the office today, so I had no input. But how do you think about this?
Yes. So I did ask the girls in the office if they had any hacks for getting costs and stuff down, which we could absolutely do a whole episode on. But to answer the first question, in terms of where do you put it in your budget if you're going to, like we talk in that episode, which I can link, about having different buckets, like different, bank accounts that have different jobs. And one of them is discretionary spending. And a lot of this stuff would fall under discretionary spending. But if you know that these are things that are important to you and that they are part of your life and expenses, then they should be in your budget. So if I was going to be doing this, I would, probably have it in a separate account because I'm very big on separating things out. So like if they're not going to be consistently every week that you can go, I need $20 a week for this item and I'm going to spend it. So it's in your discretionary account. If it's like, well, I'm going to put away $20 a week, but it might be $100 a month or every 3 months the expense comes up, I just put it in a separate account, which is kind of discretionary. You can use it whenever you like, but it's set aside for these things. Like that might make your life a little bit easier, but just depending on how much you're actually spending on this. But I would be putting these costs in your budget. If they are important enough that you want to keep them and you want to make them actually work, then they have to be in there. And I'd probably, to make your life easier, if they are this big of a problem for you, I'd just maybe a separate account or something just to keep them out. But then we did have some tips from the ladies in the office. And I actually recorded a podcast episode. It won't be out by the time this one is, but watch out for that. It's with Lottie and she owns a company called Banish and she's just written a book called 365 Ways to Save the Planet and Money at the Same Time. And that's got lots of hacks in it about clothing, beauty, products, all of these kind of stuff is covered in there. And she's on Instagram as well as Lottie DL. Great stuff like that. So cool. Check out those hacks. But yeah, the girls and I here in the office, we were kind of just talking about like different ways that you can save money and how ridiculous it is, extra money. You've got to pay extra for women's raises over men's and just stuff like that. But I think, whatever services you can kind of push out. So lots of people are kind of religious with how often they go to the hairdresser or whatever. Like if you can start squeezing like a couple of extra weeks in between appointments and, all of that stuff, that really helps as well.
I can tell you how we deal with it in our relationship is that all of those things just go into like team costs, right? So we have our own little discretionary money that's like more just for splurging. But we do actually have a separate one for health and beauty. So like it's like a separate account. It's like a team account that we both
That's
contribute.
For you getting your hair done at the hairdresser?
Yeah, now it is. No, when I had hair, I didn't shave my head.
You are shaving it yourself though, are you?
Yeah.
That's what I thought.
bought myself a Wow razor from Costco, I think it was.
Did that come out of that allocation?
Probably. But this health and beauty one is not just like beauty products. It's more like hair care, like hairdressers. It's also things like maybe it's like psychology, maybe it's things like mental health that can go in this bucket too. So it's kind of like health and wellness. And that is how we deal with that. Like I feel like that's the appropriate way to deal with it. But funny story is we worked it out because obviously women's haircuts are substantially more expensive than men's, depending on, I'm sure some men listening to the show have some beautiful locks, but on average, it's probably not what happens. And
men that go to barbers now, like that's pretty expensive and that's like a regular trendy thing.
Well, this is the thing.
Oh, did I just ruin it?
No. Like, I don't do the trendy thing, but we worked out that my I'd have to have mine cut more regularly. And the actual cost over a year was more for me.
Really?
Yeah, because Sarah only got her hair properly done every 3 months.
Yeah.
Whereas I was every month I had to go.
Because yours is like the maintenance that you notice, whereas with women it's longer. And,
she could push it out a little bit, as you were saying. So that was really interesting. But definitely all those other things. I feel like we were saying before, would absolutely love it if people could write in and let us know the things that they spot that are more expensive. Mm-hmm. So things like the razors, just for men and women, is exactly the same thing.
And there'll be things that go either way. Like it won't all be everything for women is more expensive. No. It'll be, some stuff is marketed for men and it's more expensive. But yeah, if you're seeing this kind of stuff in the supermarkets or the shops, we would love to know. But I think that would be a really good full episode.
We did I mentioned another thing just quickly before. One of the most successful piece of content that Queenie, who comes on the show every now and again, Queenie Town, that she ever has done was showing that when you go and buy ice cream, they measure it by the mil. So it'd be like 500 mil, half a litre, when really the true value of ice cream should be measured in grams, because the cheap ice creams, they just pump full of air to make it look bigger. So they puff it up. And you see that when you go to places like Florence and stuff in Italy. You don't go to the ones that have the mountain high ice cream because they're the cheap tourist traps. It's all the ones that are really dense. And so like that's a good example of like a consumer point of view where these things just don't make sense. Mm-hmm. Like, so if you have any of these, if you're out there thinking, am I going crazy or is this not real? Like, write into us, let us know these pink products and the costs associated with that. Or if it's just random things that you're like, shavers, there's no difference. Like, let us know. I think at Vitabrits and Weet-Bix is probably one. Weet-Bix won't want us saying that, but it's true. Boris writes in and says, is it still worth investing in LICs? Remember, this is a listed investment company, so we'll define what that means in just a second. I started investing in one last year thinking it was an ETF because it was very similar, and at the time I didn't understand the differences. Now I'm not sure if I should continue with the LIC or just start investing in an Aussie and global ETF. Did you want me to explain what they are?
Yeah, jump in. I actually really love this question because I don't think we really talk about listed investment companies that much, and I think people will be really familiar with ETFs. Yeah,
so ETF stands for Exchange Traded Fund. What you get is a fund that's on the stock exchange, Exchange Traded Fund. And so VAS from Vanguard, many people will know the most popular ETFs, IVV is the S&P 500. What happens when you buy an ETF behind the scenes, just so everyone is aware, is when you invest, your money goes through your brokerage account and into the ETF. The ETF on the other side, the provider, and we'll keep it simple, the provider, what they do is they go and collect all of the shares that belong inside that ETF. And they go, here you go, Gemma, here's your units, right? And we'll take the cash, right? That's basically the gist of it, right? Mm-hmm. So you invest, I go and collect all of those shares and I give you back something called a unit. That's why when you get your dividend, it's not called a dividend, it's called a distribution, because trusts pay funds pay distributions, and that's a key difference. So anytime you see something that says you just earned a distribution of, you're basically buying an ETF. So the mechanism, just to be very clear, is Gemma makes the trade. Me, I'm the ETF provider. I go and collect all of the shares that are inside that ETF and I hand you something back. So I do all the complex stuff, right? The key difference is that with a listed investment company, you're not buying a fund. You're buying a company that's listed. So this could be ETC, Exchange Traded Company, but we don't use that language. We use listed investment company. Now, in this instance, when you buy the shares, right? Imagine I'm the LIC and you're the investor again. You invest the money, but that doesn't actually come to me as the LIC. It doesn't matter. What actually happens is you're buying those from another investor. So this is just like trading a normal company. So you go buy Apple shares. It's not like they're creating more and they're just giving you more Apple shares. What's actually happening is you're buying them from another investor. So the fundamental difference between an ETF and a LIC is an ETF just creates more and more units and they go and collect everything for you because they can just go out and collect more shares and give you more units. But with a LIC, you're actually having to buy from someone else. And you might be thinking, I'm in the weeds a bit here, but let me just bring this home for you. this is where they in practice are different and why ETFs tend to beat LICs. What happens in this scenario is because Gemma buying a LIC, she's not buying from the company, she's buying from another investor. That means the share price can go up and down, depending on supply and demand. But what's inside the LIC doesn't change. So the share price bounces up and down and up and down and up and down, but you might not be getting $1 for $1. You might be going, here's $1 and getting 70 cents worth of investments back. You don't realize it, but on the inside of that LIC, totally different to what you're trading in. So an ETF is like you're getting 1-for-1 every single time. Good examples, Vanguard, we mentioned IVV, BetaShares, sponsor of the show, GlobalX. A good example of a LIC is Argo, AFIC, these types of things. And the key difference is that the share price of a LIC moves up and down, and it doesn't always represent what's inside it. And it kind of creates a barrier for some people because they're like, I don't know if it's a good deal. Am I overpaying? Am I underpaying? Whereas with an ETF, you just go straight in, straight out. Does that make sense? I know it's complicated. I feel like it's complicated.
They are pretty complicated, yeah. And ETFs, they'll generally be like more indexed, right? Like
exactly.
They've got a bit more of the theme, but these companies are buying and selling they're doing like an active management style.
Most of the time, yeah. Yeah, so like AFIC and Argo, which were the two that Barefoot mentioned, which made them really, that wasn't why they were popular. They've been around for like 100 years. But they're really low cost. And to be honest, all they do is they just buy and hold CBA and BHP.
Yeah.
They're pretty boring. Like they look like an index fund from the outside. So it's so easy to get them mistaken. But really an ETF has to say in its name now, if you look on your brokerage account, legally they have to say ETF in the name. There was a past where there was no like naming convention and people were just getting confused. So now they have to say that. A telltale sign is obviously the name says ETF, but for listed investment companies, it says limited, LTD. So limited versus ETF. And it's just to try and signal to you the difference so people don't get more confused. But there's some really interesting stats around this. ETFs are growing way faster than LICs. And the predominant reason is, Jem, what I mentioned before, is that you can either be paying over or under, premium or discount, we call it. The second thing is that they're fully transparent. ETFs, you can go onto their website any time of the day and see what it is inside the ETF. You can't do that with LICs. You can get a summary, but you can't get the actual investments. And finally, on average, ETFs have about half the fees. People don't know that. So the average fee when I did my numbers like a year or so ago was like 0.45 for ETFs, and it was like 1 or 0.9 for LICs. So cheaper as well. Yeah. That's why they're winning.
Okay.
Yeah. Now, to the actual question, I don't see this, like even though I say they're a bit more expensive, they're probably not as good. I don't want to put people off. Like sometimes what looks good in a spreadsheet is not what matches reality.
Yeah. And it's all about diversifying, right? So it might make sense to have some different styles of assets in your portfolio.
Yeah. If you have any more questions about this, or if you want me to do a video explain it, because it actually helps you understand how to do it and how do these things actually work, I'm more than happy to do that. Just send me a message on the Rask community. It's just community.rask.au. .com.au, and I'll explain to you visually the difference between the two.
Yeah, I think on that as well is I found a few people now say like comments like, I started doing it this one way because I did, like that's all I knew at the time, like this person, and now they've just kind of realized. So a couple of things. If you now learn more information and decide that that's not how you want to move forward, you have the choice to sell it and get out. You just need to be aware of tax consequences. If it doesn't make sense to sell it, you could just sit tight with that and not add any more, just change your strategy. Yeah. Like you don't always have to be like, I made a mistake. Now I've got to close that, pay the tax. Like maybe it actually makes sense to hold on to it and just focus on something else.
You know what I used to do with my real losing shares, Gemma? I always used to keep like $10 worth or one share in my account. Always.
Why?
Because it would remind me of a mistake that I'd made every time I logged in and be like, I'm not doing that again.
You can get their name like tattooed on your arm.
Yeah, just get like Dubber, which is one of the names of the company. But alas, I had to, for our disclosure obligations, I had to write in any article where they were ever mentioned that I own shares of this company, which then people thought, oh, maybe he's buying it. And so I was like, no, it's painful. That's why it's there. And so they would take it the other way. So I was like, I can't do that anymore.
Yeah.
Because our disclosure was more important than me having
than you getting the
searing
lesson
it onto my brain. Yeah. The final question comes from Hole in My Pocket, which is a nice fun one to end the show. What platform would you use for micro investing for complete beginners with a short attention span? Don't we all have short attention spans these days? And aren't we all complete beginners? So I've done a video of this recently, and I actually did the short episode on the Australian Finance Podcast, micro investing platforms, 5 platforms to use. And I talked about platforms like BetaShares Direct, disclosure, BetaShares sponsors the show, Perla, which is Perla Micro, which is not their full Perla one. It's the one where you can have small amounts of money in just a few ETFs. There's ComSec Pocket, which I think you need $50 or $100, which is just a limited selection of like 7 ETFs that you can choose from. Sharesies, which lets you go with like $1, and Raise, which is like, I think you can start with like $5 or $10. I have a Raise account because I don't think you need to just have one. I have a Raise account, Perla account, Rask Invest account. I even have an old ComSec account, and I'm fine with that.
Yeah, I've got a couple. I've tried a few over the years as well. And I think people get stuck on this as well. Like, so you've just given 5 options and then people go, oh, it's so hard to actually decide which one to use. Most of the time they're all much of a muchness. They're all pretty similar. Yes, there are detail that you need to kind of know if you're going to be doing quite a bit with it. But if it comes down to just getting started and starting to learn and, just go with whichever website you like better and you like the app better, or whichever's going to kind of just be the easiest for you to just get started, and then you can start researching and doing more stuff. And when you know better, then you can do better. And maybe you change your platform down the track.
You can always change, right?
Just get started.
Kate would always tell me never do more than 3 options, but I just did 5.
Yeah.
Because there's a lot of literature around that. After 3 choices, you get analysis paralysis.
Yeah. It's so hard. And so maybe these people, if they're going to look at the 5, they pick 3 and then they go and look at those 3,
I would probably, it's going to sound biased, I'd probably choose Raise, probably Perla Micro, maybe, but it depends if you just want a limited number of options.
And it depends what features. What about if you want the roundup? Raise does roundup, doesn't it?
Raise does roundup. I don't think any others do it? I don't know if they do.
I used to do roundup with them. What did they used to be called? Like Acorn?
Acorns.
Yeah. So I used to do the roundup, and this is such a long time ago, but it would always stuff me up because the roundup would come out once a week. And so I always thought I had more money, and then my account would go overdrawn because of the roundup. And I was like, I got to get rid of this.
So what happens for people that aren't familiar? If you have a roundup feature, it's like you pay $4.50 for a coffee. It will round up 50 cents. So it's even 5. But people don't realize that doesn't come out straight away. It's not like $4.50 from your favorite coffee shop, immediately 50 cents. Yeah. What it does is it will batch it. So you can wait till it gets to $20, then pull the money out. Wait till it gets to $10 and pull the money out. That way it saves costs and everything for Raise and for the user. So that does catch people out. But like I said, I still use Raise. I use it for rewards and all that sort of stuff. I use the main shares account from Perla. A lot of the people that use Raise, regrettably, they think it's like play money, but it actually is a real investment account. Same with Perla Micro or BetaShares Direct Sharesies, they're all real accounts.
Yeah, and you need to treat it like that. You need to treat it like with the time frame, because people use them as savings accounts and they go, oh, now it's up to 1,000 or 2,000, I'm going to take that out. Or it's like, no, this is in the share market. You can go up and down. Like this is, it's not play money. Yeah. You can absolutely, have a play around with it and learn, but it's long-term money that you want to be putting this away for.
There's what people aren't aware of inside of Raise is there's a version of it called Plus, which you pay like an extra $1 a month or whatever. This is one that I do. Inside of Raise is the Plus account, and from there you can design your own portfolio. So you can have your own, you can put shares in there like Cochlear, which is the hearing implants, CBA if you want that. You can do the shares and ETFs, so you can mix your own. And a final feature they brought out recently, which was really cool, is you can have from one account, you can set jars, but each jar can have its own strategy. So you mentioned savings before. So for a bit of fun, when Brendan, who runs Raise, told me about it, I went in there and I'm like, boat. And then I had another one, Christmas presents. Then I had another one, I don't even know what it was, like overseas travel or something. And you can have a different roundup for each portfolio and a different amount of recurring investments, and you can have a different strategy for each. So say, for example, if in like you had, I don't know, Europe 2027, so it's like 2 years away, you could have a really conservative strategy for that one goal. So you can round up into it like a savings account.
Yeah.
You could round up straight into that. Mm-hmm. And then you could have another one that's like new house 2030. I don't know. So it's a longer term goal. So you could take more risk. So you go a different strategy and more roundups for that. Does that make sense?
That's really cool without having to have separate actual accounts and platforms.
Yeah, exactly. So, I mean, it's cool. I like it. I reckon, I was like, this is really cool. I'm actually going to use it more.
That's
so I might actually, while we're live on air, I might actually just bring up my Raise account and see what's actually happened. Because it does send me reminders. So I've got 3 jars currently automating. So I don't know if we can see that, but it's got new boat, $301.44. This is going to cost me 50 grand, by the way. And it's got like a little tracker to track that. Emergency fund, I just did this as a bit of fun. It's got $60.04 and gifts.
But we don't recommend investing emergency funds.
No emergency fund investing. But I didn't know what to call it. So I've actually lost money on my gifts. Damn it, $5 down. Invest more. But I thought that was kind of cool. This is not a promo for Race, by the way. I just thought that was kind of cool.
Yeah, that is cool. And I've heard about some banks that do that with their banking platforms as well.
Up does it. Yeah, which is really cool. Ubank. They're really cool, those neobanks that do that. You can use like emojis and custom stuff. But that's really cool. I think that like all of them, Perla and BetaShares in particular have OSCO. So like if you want to transfer money, it's virtually instant. Sharesies, I think, does too. So like there's a lot of good options.
Yeah.
It's just get started. Don't let it hold you back. Learn as you go. Ask us any questions you like. Jump in the community or here on the podcast.
And if you've got a short attention span, you want to pick one and automate your investment.
Yes.
So it's regularly doing it for you, and then just forget about it.
Even just take the app off your phone so you don't even, it's not easy access.
Yeah.
And by the way, short attention spans, we are on Gemma is regularly on Instagram. I do a few TikTok videos every couple of days. So you can come over there and ask some questions as well. It's Rask Invest on those platforms. And Gemma is also available on Instagram. Gemma's new book is coming out soon. We might put a link in the show notes to that. That's exciting.
Shameless plug.
You're
going to hear about it every episode.
Yes. Gemma's book. When the cover is revealed, we'll have to do a cover reveal.
Yeah.
But it's heaps of fun. So just to recap here, Andy asked about investing if you're an international here in Australia studying. Just beware of the tax consequences to know what flexibility you have. Damn, it's expensive to be a woman asked about pink costs. Be sure to send us in all of your tips, not just around about pink costs, but also around about things that just don't make sense, like razors that cost more if they've just got a female logo on them, so to speak. Boris asked about investing in LICs. LICs can be good. Let's not rule them out, but on average, there are a few things going against them in recent years. Hole in My Pocket asked about investing for complete beginners, and we mentioned a bunch of different platforms to go and try. All of them are free to open, but just keep in mind we do not make recommendations on a podcast like this, so anything that we do mention is general in nature. There will be heaps of resources in the show notes. Be sure to reach out to us to suggest new episodes or send in your question. We'd love to hear from you. Gemma, as always, absolute pleasure.
Thanks for having me. I'll see you next time.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.